This is Money, Motivation, and Mike, and I am your host, Michael Wainwright, in charge of all the controls and our favorite mothership engineer, Jason Wright. And hello to you, world. This is the show that will change your life. As always, you can reach us at mx3.vip, or you can email us at info@mx3.vip. Also, now remember our new YouTube channel. That is youtube.com/@MX3 podcast, where you can come and look at my lovely face on a weekly, actually on a daily basis, but on a weekly basis for new podcast episodes and new YouTube episodes. Now, the listening audience has been very, very good to us since the inception of this show. And Jason, if you think about it, we are now moving into month 9, and we had some major growth over the last 90 days. Really kicked it in during the holidays in the month of December into where we are now as we enter March. And I want to give some of those statistics right now because we are on our last episode about tax season and some of the things that go on with your tax return. We talked about some statistics, and of course, I love those things. But here's where we are. In the last 30 days, which is basically the month of February, it is the month of February, we had 14,443 downloads to our show. In the month of December of 2022, we had 4,464 downloads to our show. So you go back. February, last month, 2023, we're averaging 3,611 downloads per episode. In December, we were averaging 1,116 downloads per episode. That is incredible growth. Frankly, I'm impressed with those numbers, and it's just because of you, the listening audience, who continues to promote us on a daily basis to your family, friends, and whomever else it is that you run into, and we certainly appreciate it. And very, very soon, one of these days, we'll have Fan Appreciation Day, and we'll figure out something very special to do for you. But at this particular time, all I can do is give you a clap and thank you. Thank you very much. We are very, very happy to what is going on, and we know that growth will just continue on a daily basis as we continue to push and try to get our message out there of money, motivation, and Mike, and trying to help people change things in their world. Something as simple as a little bit of growth to as large as conquering the world and building skyscrapers and everything in between. That's what we're all about. Now, in our last episode, we were starting our conversations on tax season because 'tis the season to pay your taxes, as you will in 2023. And everybody knows that is my profession and something I've been doing now going on 33 years. We talked about audits and talked about different things that are submitted to the Internal Revenue Service and the deadlines. And I just want to go over that one more time with the deadlines, and then we're going to get into today's information when it comes to taxes. Remember, this year, the deadline is April 18th. You must have all your documents and your tax returns submitted by then, unless you file an extension, and then you would have till October the 16th. Business tax returns, we're coming up here in a couple of weeks. March 15th is the deadline for your business tax returns, and that is include partnerships, limited liability companies, corporations, S corporations, limited partnerships, etc. So you need to make sure that you are on that deadline, and if you file an extension there, then you have till September the 15th. So those are very, very important dates. You don't want to be late, because if you owe money and you're late and you don't file an extension, penalties will incur. Not only that, but interest as well. So I'm sitting here and I'm getting ready to prepare my tax return. And what are a couple of the things that I need? Or I'm going to take it to a preparer. Maybe I already have a professional. Maybe I'm considering this. Maybe my tax situation has changed to where I do need a tax professional. So what are the things that I need? Because one of the things that you never want to do or continue to do is show up to get your taxes done and you don't have all your information. You think you have it all, but you really don't, because you forgot about that. You forgot about this. We have people walking all the time. They forgot about the fact that they had a child in the last calendar year, and they forgot to bring that information. And then they don't tell us about it. And then whenever they get their tax return back, why didn't you put little Johnny on here? Well, we didn't know little Johnny was born. So I'd say the most important thing you ought to remember is your dependents. And we'll get to that momentarily. But right now, when you are preparing your taxes on your own time at your house on TurboTax or whatever the case may be, the online website of the IRS provides, or you're going to a tax professional, here are some of the things that you need to remember. You need to get a copy of last year's tax return so you can compare what you're doing now to what you did in the past. Make sure you have all the valid Social Security numbers for your spouse, your dependents, etc., and Social Security cards and copies of those will be needed by your preparer too, just so that they will have on file. Some of the income that usually comes along with your tax return is Social Security benefits, unemployment compensation, all the receipts, expenses, and income pertaining to a small business. Don't forget about your rental properties, maybe some royalties. Maybe you own some partnerships and you have a K-1 coming from those particular tax returns. So there's a whole lot of things that go into a tax return just besides the W-2s and the 1099s of the interest and dividends you receive from your banking institution. So make sure that you are looking for those items. Many times do we do taxes and someone is just getting on Social Security, forgot about the Social Security benefits. We had to go back and amend that return. Someone lost their job for 60, 90 days and they had to go on unemployment compensation. They forgot about that because it was last April, and then we have to go back and amend that return. Amendments take a long time to go into the system. You probably will receive a letter from the IRS stating that you need to amend your return if you do it incorrectly the first go round. So it's okay to wait another day, another week, to make sure that you have all your documents. And you really, what I think you should do, and what we encourage our clientele to do, is start in January and go forward. If you know that you've only worked one job, then you've got one W-2 coming in, and now you're prepared. If you had a couple of different jobs, you're going to have a couple of different W-2s. And like I say, the unemployment, whenever that unfortunate circumstance happened and you had to go on unemployment for a moment, or your Social Security benefits started up in September. You just need to think about what happened in each month, and so that you are prepared whenever you do your taxes. And those of you who live close to a casino, and a whole lot of people in this country now do, don't forget your W-2Gs. That is the income that you receive from the local casino. Comes on a W-2G. Obviously, G stands for gambling, and you need to make sure that if you're up there bingoing and you're making some money, you need to make sure that that's put on your tax return, because I can promise you the casino is reporting it to the IRS, and I can promise you that the IRS is down there making sure that the casino does as well. So another big deal there to make sure that you have. Now, if you live in one of the 45 states that have state income tax, you'll also possibly run into a 1099-G, which shows the refund that you received last year from that state, because you deducted that more than likely on your taxes, and now you got to go back and pay tax on your refund that you had from the previous year. So 1099-G is your refund from a state income tax return from the previous year. Now, some of the credits that we have received in the past are significantly greater because of the pandemic. Now, basically, they're significantly less, smaller, if you will. They're basically back to the 19 levels. For example, you're an individual, single filer, and you have no children. And let's just go with 2021. Roughly, the earned income credit was $1,500 in 2021 for the 2021 tax return. And obviously, we're working on 2022 taxes right now. That number from $1,500 earned income credits dropping back to $560 for the 2022 tax year. That is a significant drop in an earned income credit that an individual, I'm sure, has needed and will not even be eligible for here in 2022. For those of you that receive $3,600 for a dependent, which is basically all of us that had children, or you had children under 17 years old, that number went from $3,600. It's going back to $2,000 in 2022 on your 2022 taxes. And will probably increase next year, but there you go. $1,600 deduction just over the last 12 months. Now, child and dependent care, which right now is about 20% of the tax returns in the United States of America. Child and care dependent tax returns will return back. This is credits now. This is not deduction. This is credits, where the dependent is a deduction. But Going back to the credit of the child dependent care, it's back to $2,100 max in 2022, and that number was $8,000 in 2021. So these are all credits that we're talking about here, that you will not have quite the refund that you've had in the past, especially 2021 versus 2022. So make sure that you're aware of that, and those are credits. Now, one of the other deductions that we're not going to get is no matter if you could itemize your deductions or not, they were allowing a single individual, the IRS was allowing a single individual to take a $300 deduction for contributions and a $600 deduction for married filing jointly. And both of those have left us as well. Okay. Now, moving along to standard deduction versus itemized deductions. And this is a big topic that I would hope that everyone would listen to and listen to carefully, because a lot of people get confused about that. No matter what you have, whether you own your house, whether you pay a ton of interest, whether you don't pay any interest, whether you have property taxes, whether you don't, you get a standard deduction. And we're just going to start with the single individual. Any single individual under 65 years old gets a $12,950 deduction. So you're going to get that deduction no matter what. What that means also as a single individual is you need to make $12,950 to file a tax return, or if you have federal withholding in box 2, you need to file as well, because you'd be getting a refund. So $12,950 for a single individual under 65. If you're over 65, that number goes to $14,700. The other big filing status is married filing jointly. So if you are under 65 years old, both spouses, your standard deduction is $25,900. If one of the spouses is over 65, your number goes to $27,300 for your standard deduction. And if both you and your spouse are over 65, your standard deduction is $28,700. That's what you would need to make before you were to file a tax return, unless you had federal withholding and you still had a job, you worked a W-2 income, you had money withdrawn that would be in box 2. You would want to file if you had federal income taxes taken out of your Social Security check, because you're over 65, you'd want to file as well. But if both you and your spouse are over 65, it's $28,700. If both of you are not 65, it's $25,950. That is the standard deduction that you receive no matter what. Every year, this number goes up. Now, why is that of significance? Because a lot of people in this country think that they can itemize their deductions, and itemizing deductions becomes a little bit more difficult every year. One of the reasons is because the standard deduction goes up, so that's more that you have to go and meet the minimum, which, like I say, married filing jointly is $25,900. But it's also because the IRS is now limiting our property taxes that we pay to $10,000. So what makes up itemized deductions? Your house interest, your property taxes, your contributions, medical expenses. Those are the big things, the big items that make up itemized deductions. So when you go add those up, and of course, we'll take medical, for example, it has a floor of 7.5%. So if you make $100,000 within that household, the first $7,500, that's 7.5% of $100,000, the first $7,500 is not taxable. So if you had $8,000, it's not deductible, excuse me. If you had $8,000 worth of medical expenses, you could only deduct $500 against your itemized deductions. If you had $15,000 worth of property taxes, you can only deduct $10,000. So you can see that it's becoming more and more difficult. And then, of course, we know non-reimbursed employee business expenses went away here a couple of years ago. So that's also why the standard deduction is a little higher than it typically has been, and has increased at a little bit greater growth than what it has in the previous decade. So right now, married filing jointly, $29,500, a single individual, $12,950. Those standard deductions. Get with your tax preparer and figure out if you're going to take the standard deduction or are you able to itemize your deductions. Now, we've discussed a few things here. Like I say, then we've continued to go over tax season, continuing to talk about the credits, the deductions, the things that you need to go and prepare your tax return. Make sure you listen to this episode and listen to it again so that you are prepared. And if you have any questions, you know you can always email Money Motivation and Mike at info@mx3.vip. And you can always visit our website, mx3.vip, and find the downloads that we talk about here on our podcast, as well as our YouTube channel, which is youtube.com/@mx3.vip. In our next episode, we'll continue to talk about taxes and continue to bring you information that you definitely would need to possibly prepare your tax return. And until next time, live your life the right way.